Welcome to the Melrose Show, Season 2. Melrose here. If you listened to this intro before, you can click the forward button now 8 times to get to the start of this episode. Before this version of myself, I was many things. That included artist, fashion designer, professional model, TV personality, small business owner, real estate agent, the list goes on and on. All before finding my career in finance and in empowerment. After all of that work, exploring different careers, I've realized that the best place and the safest place to live is safely inside of myself and in my purpose. It was a wild ride to get to where I'm at today, after living in many countries and many cities, trying to get to a version of myself that felt complete. I've found that growing and living in a space, in a community that wants to see you grow, allows for integration and allows for you to meet your authenticity with awareness and self-care. I want the same for you. Through my highly versatile career path and working with others along on their dreams, I decided to start this podcast to try to help people understand that life is not a race, it's a marathon. Career is not a ladder, it's a jungle gym. And that spirituality and spiritual equity in what we do with our lives, especially for women, matters. Because of that, we're launching Season 2, which is an integration podcast. We will be re-interviewing people from Season 1. If you hear someone on this podcast, the hopes are that they'll come back and expand their stories. We are one of the first integration podcasts where we let guests and hope guests will come back and expand their stories. This podcast supports an amazing group of women and human beings who are on a mission to help heal the planet in some way, whether it's through humans or art or all the other amazing ways that we can heal and help each other. So sit back, relax, and enjoy this journey with people from around the world who have self-actualized in some way. I hope that they will inspire you in your own authentic journey. Enjoy. Hey, everybody. Welcome back. Season 2 of the Melrose Show. I am so excited. We're here with Alan Smith from Musa Capital. Really grateful to have you on the show today. You are our first male on this show.
Thank you very much for having me.
You have made it through the C-star barrier. We'll call you our Neptune brother. I'm so excited to have you on. Alan is a client at Permaculture Capital, and I would just love to learn more about you. So why don't you introduce yourself to get started?
Absolutely. My name is Alan Smith, managing partner at Musa Capital. Musa Capital is a VC fund based in Palo Alto, focused on investing in teams with Black founders and solutions disproportionately impacting urban environments.
Where are you from? How did you come to the decision to create Musa?
Yeah, it's kind of a long story, but I'll try to be brief.
Okay.
I'm originally from Tempe, Arizona. Both of my parents were professors at Arizona State University. My dad was a statistician that focused on race relations, and my mom taught sociology and child psychology. Growing up in Arizona, I grew up in a pretty heavily white area. And so my parents went to great lengths to instill strong concepts of race inside me and my brothers. The reason is just to understand that we were Black, that we were a minority, and that we were going to have a different experience than many of our peers, especially in the state of Arizona. So I took that experience largely with me when I went to Stanford University and had the opportunity to play football. And over the course of 4.5 years in the Bay Area, really came into my own in regards to discovering technology, as well as software development, business, and business communication. I went through a long career of financial services before moving into consulting and then eventually breaking into strategy and operations for LinkedIn and Microsoft. But one of those things that has been foremost in my mind is how to leverage the skill set that I was building to essentially give back to my community. One of the things that I recognized was that I was very privileged as a young man. I had 2 university professors as parents, had the opportunity to go to Stanford University for a gainful education, and then had the opportunity to work some of the most illustrious jobs in financial services as well as technology. And I just wanted to understand where these skills were going to lead me going forward. And it wasn't until my time at LinkedIn and Microsoft and the onset of the pandemic where all of that really came to fruition. During March 2020, the onset of the pandemic, there was lots of discussion within the Black inclusion group at LinkedIn Microsoft of what could be done to offset the economic disparity we were seeing a rise in the Black community due to the pandemic. We had kicked around a lot of ideas during that time. A Black Folks Community Fund, a Black Focused Commercial Bank. One of the things that we recognized very early on was that we didn't have competency really in any of those areas. The one thing that we did have confidence in is our ability to understand and opine on early stage technology projects. And so the thought was like, hey, could we raise a couple $1 million across the Black constituents at LinkedIn, identify founders in our network, and invest in them as a means of providing an economic answer to the pandemic, albeit for a subset, for a specific group. And it wasn't all inclusive, not all encompassing, but it was what we felt good taking action on. But in the process of trying to raise that vehicle, one of the things that I ran into is that the large majority of the Black employees and regular employees that I talked to were mission aligned. But very few had 10 to 30K that they could plug into a venture platform that had the chance to go to zero. This surfaced to me that minority technology workers, ostensibly being some of the top professionals in their respective communities, still did not have excess income for wealth creation purposes. And that felt like a gap. When looking at my own circumstance, recognizing being a Fortune 500 technology worker, I didn't see a means of really participating in the alternative asset class. And so it almost felt that venture capital wasn't for me. And that seemed like a disservice because I have always felt that inclusivity was a precursor to innovation, and innovation a precursor to alpha. And so to have an asset class that was constructed to be a significant barrier, especially for minority workers who had lower amounts of equity native to their families, really became my mission to try to unlock that asset class and the innovation within minority communities. So I ended up coming up with a model that would allow Fortune 500 technology workers to participate in a VC fund with stock instead of cash. This would allow technology workers that had these vested stock units just as a matter of compensation, the ability to invest in the alternative asset class, but in lieu of cash, they could commit shares that would then be financed by an independent third party that would write a check into the fund 100% worth of value of those shares. And the way that we were able to accomplish that is twofold. First is we made the technology workers priority in our VC waterfall. This allows them to participate in our VC fund in the lowest risk participation method available to any technology worker in VC. And the reason why this is so important is most technology workers, especially minority technology workers generally, take a do no harm approach to equity. So even if you give them the means to diversify leveraging VC, unless that can be done in a risk adverse manner, it's still one that's going to be a difficult sell, especially for many of the tech employees that are just building equities in their family. And so we allow them to participate in a priority waterfall position in our VC fund. But what we ask for in return is for them to spend upwards of 50 hours a year inside our portfolio companies, helping our founders work through sales, marketing, engineering, and product challenges. This allows us to create a large basket of operational hours that can then be deployed into portfolio that can extend operational runway and really help the execution outcomes of many of the companies in our portfolio. To my knowledge, Musa Capital is the first VC fund to offer this. And for the financing partner, the person writing the liquid check into the fund, they are partners, they benefit from the management carry. So that's how we were able to create a financial structure that incentivized participation from minority technology workers, while at the same time creating an execution advantage for the companies that we invested. And so that's Musa Capital in a nutshell. You asked me like how I initially got on the track to start Musa. It was really just trying to answer a key question, which is how can more minorities participate in the alternative asset classes? In doing so, making it a vehicle that can be wealth creation, not just for those who already have large amounts of equities in their family, but really as a wealth creation vehicle for those who are just coming up.
So do you there being Musa private equity, Musa like real estate, do you want to do all the asset classes, or is venture for this early stage tech going to be your sweet spot? How do you see the future of Musa growing, and how's it going so far?
Great questions. The future of Musa Capital is extremely bright. When I think about expanding asset classes, I'm not sure this model is as accretive in real estate or private equity. The reason why it's so powerful in venture capital is due to the nature of the power law. Everyone knows that within a portfolio, it's likely 1 to 5%, right, of the companies that you invest in that end up returning the large majority of capital for your fund. And this is because most VC funds just organizationally just aren't set up to support an expansive portfolio, especially from an operational perspective. So as a result, most VC funds really only have the ability to pull one of two levers necessary to affect a positive outcome from a company perspective. That first lever is the identification and selection of a company. And I think that that's where most VC funds put a lot of their energy and a lot of their work, as they should, because the eye of the needle is small. And in order to have an investable product, the team needs to be amazing, the technology, the market size, all of it needs to be in alignment. And those investments are few and far between. But once an investment is made, the other lever that VC funds have available to them is the operational support of that company. And most VC funds just structurally are not set up for that operational support. Outside of your largest VC funds, your A16Zs, your Greylocks, most VC funds are just not equipped to provide that level of support. We are natively. So even as a $15 million fund, we can support our portfolio of anywhere from 13 to 15 companies in a much more robust way than a fund of our size or even one much larger. So that's why we want to stay focused on venture capital. But when I think about the expansion of Musa, I've always seen this as the opportunity to create more equity in the asset class. So specifically targeting other underrepresented founder classes would be the goal of future Musa Capital fund iterations.
Okay.
To the extent that the Musa Capital fund model works for African American founders, it can work for any number of underrepresented groups with the ability to not only provide high quality sourcing in that specific demographic, but also the operational support and execution necessary to make those founders successful.
And you're mainly focused on B2B tech, is that right?
Exactly right. And so to give you the full description of Musa Capital is a $15 million B2B enterprise SaaS focused VC fund targeting teams of Black founders and solutions disproportionately impacting urban environments.
How are you sourcing your deals? I love this about how you work, because when I get questions from people about, well, how many African American B2B tech founders are there? It's like, well, Alan has found a way to know exactly that number.
In Q2 of 2024, when we're just getting started, I want to say we sourced north of 600 deals across those 2 quarters. And that has largely come from our Scout program. So we have over 200 public and private technology workers that act as scouts for Musa Capital, in which we offer 10% of the management carry for any introduction made to the fund. This allows us to partner with technology workers, both in the Fortune 500 sphere as well as in private companies, to identify the best of the best Black founders building amazing solutions, and then have them referred into Musa Capital. We then leverage that long tail and apply a scorecard methodology to identify the top, call it 5 to 10% of companies at any given point in time to begin diligence. And then I work very closely with my investment committee, which consists of TC Ostrander of Catalyst Housing Group, as well as Wayne Moore, then my investment committee members. And we have a process of identifying the companies that we're going to be making investments into. The partnerships that we have with other VCs is actually pretty expansive. Just recognize that from a VC fund, you're going to see, call it 1,000 deals a year, and you're going to invest in 20. And so recognizing that amazing deals are going to cross your desk that you're not going to end up investing in. And for the ones that are exceptional, you still want a strong network of general partners that see the world the same way you do, that you can refer deals. And so as a result, I have made deep partnerships with a number of VC funds, mainly Level Up Ventures out in LA, where essentially every deal submitted to their deal network is also captured for the ones that fit the Musa Capital thesis. And likewise, I began reaching out to many prominent and existing VC funds to let them know that if they come across any promising Black founders that aren't either in their investment thesis or in their investment trajectory, that they can be referred to Musa Capital.
If you're listening to this and you are at a VC and you want to work with Alan, please do reach out. We want to find the best deals for Musa. We also want to make sure that people know that there's a place that will hopefully just keep getting bigger and bigger and bigger to support, not just financially, but also operationally. I try not to take on funds to raise capital for if there isn't a heavy reason around operations, working inside of private equity and also observing VC over the last few years. The ones that are doing a great job are either they've exited companies and have strong operational skills, or they're finding mechanisms to getting operations in front of founders, not just giving them money and saying good luck. I think that number, that 5% that makes it, I think that number directly translates to why VCs are having a hard time raising capital, right? Because if you're only hitting it out of the water with one of those companies, that's a lot of lost investor money still. Yes, they get their money back, but why couldn't it have been 6 of them or all of them were blowing it out of the water? So
No, you're
I like the idea, and I'm excited to watch it get into motion.
So part of this model has been an empathy to allocators, recognizing that VC is an asset class. While, as they generated tons of value over the years, over the last 10 or so, those returns have been diminished. And I would say that part of that reason is the fact that VC as an asset class really hasn't innovated. It's ran the same playbook for largely the last 20 years. And I would say that if it's not broke, don't fix it. But I think that one of the pains that allocators are seeing is that, hey, if you had a 5% success rate in any other industry, you would not have a job. But in VC, we tend to pat ourselves on the back, compliment the power law, and go out and raise fund 2, fund 3, fund 4. And I think that those home run bets, especially for like allocators with interest rates being what they are, there's just lots of places that you can put your money and earn return that you don't have to take the risk of venture capital. I think that VC has to evolve and has to figure out a way to produce those venture level returns in more consistent ways. The Musa Capital model, I think, is partially that answer. In the 12 to 15 companies that we plan to invest in, instead of 1 to 2 providing exits back to the fund, I'm expecting 4 to 6. And that is through the operational rigor and operational support that we're able to impart on these companies at their earliest stages. And so instilling Fortune 500 workers in best practices early in a company's life cycle, while at the same time extending operational runway from 12 months to 18 months or 18 months to 24 months, has to yield execution benefits and more consistent operational outcomes.
Yeah, it's just the numbers are not great for women and minorities in VC. I mean, I think it's going to be safe to say that in 2024, women probably got under 2% of the VC funding. Female Black founders, I think, get under 0.1, like they get under 0.1%. Black founders get under 1%. McKinsey did a really interesting study about inclusion that has since been taken down, which I asked for them to send to me, which they did, which I'll put in the show notes. But it just talks about how diverse teams, female inclusion, perspectives. Actually, we've fought for money for so long that when we get it, we actually are very, very careful with it. And so I think the future is really bright for VC funds that are considering minorities, Black, Latino, Native
This is
American.
I think you bring up a great point, Mel. And one of the questions, the biggest question that I think I've gotten during my journey in Musa Capital is the question is Musa Capital a VC fund or is it an impact fund? I always found that that question was interesting
Yeah.
because there seemed to be this kind of understanding that my investment in Black founders was coming through an impact lens, which that's not something that like I necessarily ever considered. Impact is a byproduct of what we do. Our entire focus is to return alpha. And we're doing that in the way that we see best. When you look at that less than 2% of VC funding that goes to minorities, and the less than 0.5% that I think goes to minority women or Black women, I think rational people look at that metric and say that there are probably talented people going overlooked or unfunded. But one of the main things that I get from an allocator perspective is the question, hey, is there enough talent to run a thesis entirely focused on Black founders? And I guess if the question is, are there 12 to 15 investment worthy companies that are founded by Black founders? I think the answer has to be yes.
Yeah, I
But I
mean,
think
I identified 30 for you.
I think that maybe, a similar and adjacent question is, if you have the ability to invest in anything in the world, why would you then tighten your aperture, right? By focusing on a single demographic. And it's because it's my belief that in that less than 2% of VC funding that goes to Black founders, if that number were to increase, you could find more exceptional companies that will be returning alpha. Now, the difficulty is identifying and finding those companies. And the reality is, most traditional VC funds are not networked in the communities in the way that they need to be in order to source that level of talent. And so the focus of Musa Capital, and not only on top of building this operational engine, is also building our longer tail scout network to build the largest scout network of Black founded B2B companies in the US. So we can get access to these companies early on, identify the ones that have the opportunity to move the needle, and provide them with not only early capital, but also early operational support. And I want to be clear, and then this is somewhat of an unpopular opinion, but the less than 2% of VC funding or 1.5% of VC funding that goes to Black founders, I think that there's a natural tendency to look at that statistic and just feel that that's wrong. And I'm not necessarily sure that it is. I think it's true that when you look at that number, it's right to feel that there are founders that are going under recognized and underfunded, and that is a tragedy. But I'm not sure that the right answer is to look at allocators or look at the VC industry and say that it's either racist or it's biased. Biased maybe, but I don't think a racial thing. It's more a bias across network. Just stay with me here, because being in the allocator seat, one of the things that I always wondered is why more GPs just couldn't make the choice to invest in more Black founders. Well, when I got into the weeds of it and you start taking capital from individuals, you're very clear about how you source companies, who you're going to invest in, and also the track record of how you've done that in the past. And oftentimes, those companies that you've invested in are coming from professional business school networks in which you're well entrenched. And so it stands to reason that as you go out and invest in the world as a general partner, that you're going to invest in opportunities that largely draw from those networks that might not necessarily be inclusive. And so I don't see that metric as anything other than the entire goal of VC, which is you identify the founders in which you have the highest conviction of returning capital, and you invest in them. And so the change needs to be in the allocators and where they see alpha. And while I attended Stanford University and have access to the Stanford, Harvard, Cambridge networks for all of that amazing deal flow, I also have the ability to build networks and inroads into alternative and minority communities that have the opportunity to produce outsized innovation.
I think the issue is that we just have to present opportunities for the industry to correct itself. And I think Musa is doing that.
Exactly right.
And I think the smartest way to do it for people who haven't had multi-generation success, some female founders, minority founders who maybe have been coming up through not the same circumstances as other people who get funding. I think what happens is that they do need the operational help. And because you've spent so much time just trying to get to a place where you can start your own company, right? But there are so many levels to running and scaling a successful company. So I think that operational piece is the link, right? It's the missing piece that I think is going to that the industry will see with the alpha that Musa can provide. Maybe you do 13 investments, maybe with this much operational ability, you can pivot all of them so that you get an M&A out of all of them, right? I think
Exactly
that's
right.
the hope. We're kind of doing something similar at Decision Society for women. And I think we have to stop thinking like, just give people the same thing, because actually maybe the operational assistance is that thing.
So another common question that I get oftentimes is why we talked a little bit about the ability to return alpha kind of through that community. But one of the things that you touched on, which I thought was really interesting, is this idea that if you take a founder that is used to working in a resource lean environment, and I would say that most minority and female and minority founders would be in that position. And then you not only give them access to resources, but then also coaching. I think generally the leveraging of those resources can be extremely impactful, especially in those cases,
Totally.
because you have folks who were already bootstrapping, were already growing, and then you gave them the resources to do more. And I think that those are really amazing cases in which you can drive some really outstanding outcomes in a short amount of time because the founders are primed and ready. It's one of the things that's unique, I think, specifically to minority founder communities, is this idea of like the fact that you have such little access to capital. When you get capital, you're going to be ready to run. But to your point, the operational support around that capital now has the opportunity to have them go even further because they not only get the capital, they not only have the discipline, I think, to deploy that capital appropriately, but they can also give them the coaching and education in order to do so. And I think that that is absolutely a recipe for high returns. And I'm very excited for the mission of Musa Capital for us to prove it.
I think it's better than the accelerator model because I've been through a few accelerators with some of my clients and they don't give you much money and they take a ton of time and they actually don't make that many introductions. There are good accelerators out there. Of course, Y Combinator is producing the most unicorns on the planet. We all get that. But some of these accelerators, I'm watching them really drain people and founders, especially minorities, because you're doing 10 jobs and some of your other competitors, there's 10 people working there because they got that VC funding. They could scale with the operational help. If you have to basically get like compliance in a box and marketing in a box and you have to figure out everything for yourself, you're moving at a snail's pace versus scaling, right? So I think it's interesting to have the VC with the operational help from the people who are working at the tech companies who probably want to start their own companies, but they support families and they need income. So it's a way for them to get involved, and maybe they do want to invest in that company more. Maybe they do want to go to a role in those companies that they're giving operational help. I think you've built a cool machine. I think it's really exciting. I'm excited to see it
This
start.
is Yeah, this is one of the pieces that I'm most excited about. And I think that one of the advantages of having what we call employee LPs on our platform, these are the employees that invest via the stock, then as a result, assist in our portfolio. To your point, many of them, or if not those in their network, are going to be the ones starting the next generation of B2B solutions. And so to have that front row access, because they're directly LPs in the fund, gives us an actual, call it a diversified pipeline of deal flow that is specific to Musa Capital. And in the process of those employees working inside our portfolio, they get to be building the marketing plans. They get to be building the engineering and software solutions at that initial stage, working with these founders, right, at the earliest stages of these companies. And as those companies grow, a natural hiring mechanism is going to be with those employees that was initially assisting them with their company. So it creates an ability to not only get those Fortune 500 skill sets and best practices in your company early, but also a talent pipeline that is intimately familiar with your solution and what you're trying to build. And that is, I would say, a unique value proposition that very few VC funds are going to be able to match. One of the reasons why so many founders want to work with a VC like Musa Capital, even if we're not the largest check.
Let's talk a little bit about your fiscal sponsor program for people who maybe don't want to get involved in the fund, but maybe want to donate to what you're doing.
Yeah, absolutely. So we started the Musa Heritage Foundation last year. The Musa Heritage Foundation is a fiscal sponsor program set up to support the educational programming as well as fiscal sponsorship for the community that we want to be supporting through Musa Capital. But this fiscal sponsor program will be a direct LP in the fund. And so to the extent that you would like to participate via a charitable contribution, then we would encourage you to donate to the Musa Heritage Foundation.
And the group that we set up the fiscal sponsor program with does allow DAFs to sit as an LP on their investment. So if you have a DAF and you're interested in using your DAF as an LP on Musa, we have a really amazing resource. I guess the last thing that we like to talk about is spiritual equity and what you're doing. Obviously, you're very passionate about what you're doing. I can tell working with you that you wake up excited every day about this. What's the spiritual equity in your own words, but also what's the biggest dream for Musa?
Yeah, the biggest dream. So my father passed away when I was quite young, when I was 9 years old. And in his memory, my mother started the A. Wade Smith Memorial Lecture Series at Arizona State University, which was focused on furthering the conversation of race relations in America. Since 1996, I have attended that lecture and been a part of that conversation. And so my spiritual equity was, how am I going to add to this conversation? How am I going to leverage this skill set? How am I going to leverage this education and this amazing opportunity that my parents blessed me with to be a part of that conversation? And looking at all of the various systemic issues that existed in venture capital, with so much of it making it feel like it wasn't for minorities, just given the amount of barriers. It became clear to me that an opportunity for me to contribute to that conversation was being a part of the solution, at least for this particular problem. And so to the extent that we can get more Black allocators, more Black founders exited, more Black founders funded, that is the big dream of Musa Capital. To the extent that we at all improve that 1.5%, right, of VC funding that goes to minority founders, improving that at all is the big dream.
I love that. I didn't know that about this 29-year conversation that you've been a part of, but I love that. Maybe we can share some links to that. I think you're right. I love asking that question because everyone always says something different. I've never heard it said that way, but actually, I think you're really right in that a lot of spiritual equity can come from creating solutions. And I'm a similar in that sense. So I think that's one of the reasons that we understand each other. And I really hope that this podcast helps with people understanding what you're building. And for investors who are listening, I hope that if you would like to get more information, that we can facilitate an introduction and make the connection. So thank you so much for your time. I hope you'll come back next year and tell us how it's all going.
Appreciate it. Thank you very much for having me, and really excited for 2025.
Here we go, 2025. Nothing in this podcast is a recommendation. Hey, all you sea stars, goddesses, naiads, and Neptunes, aka the paradisiacs, who care about the important stuff. I hope you all found some inspiration today, and I hope to have your beautiful souls back for our next episode. This podcast supports a beautiful group of humans who gather on full moons, and to find a link for Howl and Heal and for our website with these episodes, details, and blog, head to themelroseshow.com. You can also connect with me on IG at Melrose Wild or at the Melrose Podcast. Again, This is Melrose. I hope after you listen to this conversation, you feel some magic brewing in your own destiny. Thank you for listening, and please subscribe or follow us to get updates on new episodes. And if you love this podcast, the best compliment is to rate us with 5 stars and maybe leave a little love note about how this podcast might be helping you. Have a wonderful day, and may the forces of wholeness and growth be with you all.